Welcome to Inside the Deal. I'm Suzanne Stevens along with Ken Meyers. Ken is Vice President of M&A for Siemens Corporation. Ken, Siemens has pretty much resisted the highly leveraged deal. I'm wondering how difficult was it to resist the attractive credit markets that we were seeing a couple of years ago?
Well, we've always managed our balance sheet well. Siemens is a fairly conservative company. Our industrial businesses have been performing very well for the last few years, so we've been able to generate cash internally. We haven't had to borrow very much. It's ironic because a couple of years ago I was in a discussion with some bankers from a major investment banking firm and some accountants that practice globally, and they were urging me that Siemens should become more leveraged. We should take advantage of the cheap financing climate that we had a couple of years ago, lower our cost of capital. And we resisted that because we always have an eye out for the tough times like we're having now. And we stayed conservative. We didn't go too far into the debt markets. And I think it's served us well now, given the climate that we're in.
Well, has that made you resistant to some of the damage that we're seeing in the current business cycle?
Somewhat. Our balance sheet is strong, but we're not completely immune. Our products are primarily capital equipment and services purchased by large institutional clients, customers, as well as government entities. And with government entities, you're always worried about budgets, and for medical equipment, you're worried about government reimbursement, and those things contract a bit in difficult times. And our customers rely on financing for purchasing our equipment. When their sources of credit become more restricted, it hurts our top line, so we're not immune.
Well, are there opportunities out there?
Well, there's opportunities in mergers and acquisitions, sure, as companies run into trouble, suppliers, competitors. We're seeing a lot of intermediaries bring us transactions. And the interesting thing is that these transactions are staying on the market longer than they used to. Over the last couple of years, we've had to move very, very quickly to stay competitive with private equity and other industrial buyers. Auctions went very quickly. These days, we've seen some assets stay on the market for months. We're able to be much more disciplined, and as a company, we're becoming much more disciplined. And we're able to be a bit more judicious and take our time more in acquisitions.
Right, you don't have to rush into deals when it was the kind of frothy market.
Exactly, the deals just aren't as competitive as they had been.
How big of an advantage has it been for Siemens, being a European-owned company? How big of an advantage has that been currency-wise?
Well, it's been a big advantage for us. We're able to pay for deals with euros converted into dollars, and obviously that's given us some pricing leverage, and we've been able to be very competitive and very aggressive on some of the more competitive auctions, and some of the public deals we've done over the last few years have closed absolutely without a hitch, which is always terrific. You don't want to run into any shareholder resistance or any competitive bidding, and we haven't had to deal with any of that. It's also been an advantage for us as a seller because we've pruned our U.S. portfolio a little bit over the last couple of years, and the auctions we've had for our own assets in the United States have attracted a lot of overseas interest. We've gotten bids from European players as well as Asian players, also taking advantage of their currency situation. So
and outbidding sometimes
U.S.
buyers or even private equity?
Absolutely, yes. Outbidding private equity, outbidding U.S. industrial buyers. It's been terrific for us.
Ken Meyers with Siemens Corporation, thanks for stopping by.
Thank you.
I'm Suzanne Stevens, thanks for watching Inside the Deal.